So this is one question from your sample question. This question is on death of a partner. Calculate the amount to be transferred to the Mahip's executor's account and prepare the executor's account till it's finally settled, right? So what we have to do here, we have to read this question and we have to find out what are the amounts payable to the executor of deceased partner. The partner who dies, there is one executor of him and how much amount we have to pay to that partner, to that executors of that deceased partner, that we have to calculate, right? So I'm requesting you to read this question once and try to understand, see whether you are getting it or not, right? If you're able to get it, then you can start solving. Otherwise, in 5 minutes, I am going to discuss this question. But first you have to read this question, right, Dhanashri Sadhna? Yes, am I audible? Sadhna, Dhanashri? Okay. So read this question, see whether you are understanding or not, right? And if you're able to solve, then you can start solving also. I'm going to discuss this in 5 minutes, right? Okay. Okay, then. Shall I read? Shall I explain? Shivari Dhanashri Sadhna. Okay, serious question. 6-mark question it is. Yes. Sandeep, Mahip and Amandeep where the partners in the firm sharing the profits and losses in the ratio of 2:2:1. The firm closed its books on 31st of March every year. On 30th June 2020, Mahideep died. The partnership deed provide that on the death of the partner, his executors will be entitled to the following. Okay, sir. So what happened here? There are three partners: Sandeep, Mahideep, and Amandeep. Mahip is the partner who died on 30th of June 2020. And their year end is what? So their year end is 31st of March every year. Sir, if their year is 31st of March every year, then which one is the year? The year in which this partner died is what? It is which year basically? I can say the year is 1st April 2020 to 31st March 2021, right? He died in this year only, 2021. So in the year 2021, Mahib died on 30th June. So he died on 30th of June 2020. So it means he was there in the business from April to June. April, May, and June. For 3 months, he was there in the business. Okay, sir, I understood. Now, what we have to do here, sir, we have to calculate the amount payable to the executors of Mahib. And we have to prepare executors account as well. Right? So, one by one we read. See. Balance in his capital account, which amounting to rupees 1,15,000. So, we have to return his capital, and capital on death of Mahib is 1,15,000 rupees. So we have to return this. Yes, sir. Absolutely. Till the date of his death, the amount in rupees 5,000 is what? Say interest on capital. Yes, sir. We have to provide his interest on capital as well. And till the date of retirement, till the date of death, interest on capital is 5,000 rupees. So this also we have to provide. Okay. Then, so B adjustment. His share in the profit of the firm till the date of his death amounting to rupees 20,000. So share in the profit for 3 months profit we have to give now. So share in profit how much? So share in profit we have to provide to him is rupees 20,000. Okay, so then his share of a goodwill, his share in the goodwill of the firm. The goodwill of the firm Mahib's death was valued at rupees 1,50,000. So we have to provide Mahib share of goodwill as well. But sir, what is share of goodwill for Mahib that we have to calculate is not straight away given, right? So I will be calculating goodwill share for Mahib. So how to calculate? So total goodwill amount is 1,50,000 rupees, right? For a firm. And what is for Mahib profit sharing ratio? If you see here, 2:2:1. So I can say 2 plus 2, 4 plus 1, 5. So Mahib share in goodwill is 1,50,000 multiplied by 2 divided by 5, right? So it comes to 5 3s are 15 and 3 2s are 6, right? Now 5 3s are 15, so it comes to 30,000. 30,000 multiplied by 2, it comes to 60,000. So goodwill share to Mahib is 60,000 rupees we have to provide, right? Then adjustment number D. Loan to Mahib. So loan to Mahib means partnership firm provided partnership firm provided 20,000 rupees to loan to the Mahib, right? So that loan amount we have to adjust now at the time of retirement. We have to recover that loan amount from Mahib. So what I need to do, I need to subtract that loan amount from here, 20,000 rupees. So I can get now the net amount payable to Mahib on his death, or executors of Mahib on the death of the Mahib, how much we have to pay to the executor of the Mahib that we have to calculate. So what is the calculation? 1,15,000 plus 5,000, 1,20,000 plus 60, 1,80,000. So finally we have to pay 1,80,000 to the executor of Mahib. Any doubt so far? Any question so far? How I arrived at 1,80,000 rupees? Sadhana, Shivarish, Dhanushri. Understood? How I get 1,80,000 rupees? Okay, no doubt so far.
Sir, I have
Please,
this repeat on number, sir.
which one?
1,80,000.
1,80,000. How I get?
Yes, sir.
Are you listening entire question?
No, sir. I have.
Okay.
Listen.
I'm repeating once again. See. Please turn on your mic.
Okay, sir.
Sandeep, Mahip and Amandeep were three partners. Don't turn off your mic, huh? Just turn it on.
Sir,
Sandeep, Mahip.
on only, sir.
What?
It's on only, sir.
Yes, okay. Sandeep, Mahip and Amandeep were three partners, right? They were sharing the profits and loss in the ratio of 2:1. Right? On 30th June 2020, what happened? And they close books of accounts every year on 31st of March. It is given 31st of March. Every year they close books of accounts. See here. On 30th June 2020, Mahip died. So one partner, Mahip, he died on 30th of June 2020. Okay. The partnership deed provide that on the death of the partner, his executor will be entitled to the following. Right? And as per the partnership deed, whenever there is a death of a partner, executors will get the following emoluments or following amounts. So what are those amounts? So first they have given me balance is capital account, we showed a 1,15,000 rupees, right? So it means we have to return his capital on the date of death, 1,15,000. So I have recorded here 1,15,000 capital I need to return. Interest on a capital till the date of death, which is amounting to rupees 5,000. So till the date of a death, that is up to 30th of June 2020, partnership firm supposed to provide him 5,000 rupees of interest on capital. So that I also have considered 5,000 rupees of interest in capital. So we have to provide 1,15,000 rupees, 5,000. So far 1,20,000 we have to give to Mahip. Then, so adjustment number B. His share in the profit of the firm till the date of his death amounting to rupees 20,000. So he was there in the business for 3 months now. So if the year is ended on 31st of March and his death is occurred on 30th of June 2020, that means my year or current year is 1st April 2020 to 31st of March 2021. The year in which the death of the Mahip occurred is nothing but 1st April 2020 up to 30th March 2021. Right? In this year, on 30th of June 2020, he died. Yes or no? So it means he was there in the business for April, May, and June for 3 months, right? For 3 months he was there in the business, and for these 3 months he is getting share of profit as well. And how much it is? 20,000 rupees. See, his share of goodwill. So I need to provide his share of goodwill 20,000 as well. Then see the adjustment number C now. His share of a goodwill of the firm. We have to provide him his share of goodwill as well. But sir, goodwill which is given in the adjustment is of firm, not of the directly of Mahip. See, goodwill of the firm on Mahip's death was valued at rupees 1,50,000. So goodwill of entire firm. So I am not required goodwill of the firm. I am required goodwill of Mahip, right? So what is Mahip profit sharing ratio? 2:1 means Mahip profit sharing ratio is 2/5. So I've calculated 1,50,000 is goodwill of firm, multiply by 2 divided by 5, I get 60,000 answer as goodwill share. So I've recorded it. Goodwill share how much? 60,000 rupees also we have to provide. We have to add that, right? Capital, interest on capital, share in the profit and goodwill share. So far I have added this much of amount. Now read the adjustment number D. Loan to Mahip amounting to rupees 20,000. So we provided loan to Mahip. How much? 20,000 rupees. And if today is a death of the Mahip is occurred, so that 20,000 rupees we have to recover from him or not? Yes? We have to get that money from him or not?
Yes,
right? So what I will be doing, so I will be adjusting that amount now. So this 1,15,000, this 5,000, this 20,000 and this 60,000. So this much of amount I need to pay to Mahip now. I need to pay capital to Mahip, I need to pay interest on capital to Mahip, I need to pay share profit to Mahip, I need to pay goodwill share to the Mahip, right? So total amount payable to the Mahip is 2 lakh rupees. You can calculate it. You will get same answer. 1 lakh 15 plus 5, 1 lakh 20. 120 plus 20, 1 lakh 40. 1 lakh 40 plus 60, 2 lakh rupees. So amount payable to Mahip is how much? 2 lakh rupees. And loan recover from, we have to recover loan of rupees 20,000 from Mahip. So what I'm doing, I'm adjusting that loan with this 2 lakh rupees of amount payable. So I will be subtracting 20,000 rupees from here. So final amount that I'm getting is 1,80,000. So finally, I supposed to pay 1,80,000 to Mahip only. Understood now?
Yes, sir.
Okay. Okay. So we have to provide 1,80,000 rupees to Mahip. Now, sir, how we are going to make the payment? So it is given in the question. See, it was agreed that the amount will be paid to his executor in 3 equal yearly installments. Sir, total amount payable to Mahip is 1,80,000 rupees. That is correct. But they have decided to make the payment of rupees 1,80,000 not in a one go, but in 3 equal annual installments. So what does it mean? It means I need to simply divide it by 3. 1,80,000 divided by 3. So it means I need to pay 60,000 rupees per annum, right? 60,000 rupees per year I supposed to pay to the executors of Mahip, right? Now, so from which date we are going to pay? It is also given in the question. So you have to start making payment from 30th of June 2021. Okay, sir. And sir, no doubt, the partner died on when? So partner dies on 30th of June 2020. And you are starting making payment from 30th of June 2021. First installment on 30th of June 2021. Then on 30th of June 2022. And then 30th of June 2023. So if you are making payment in installment basis, sir, you have to make a payment of interest as well, along with that principal amount of 60,000. Yes or no? So that 60,000 rupees that you are going to make a payment, that is sure. But sir, 1,80,000 rupees total, if you are not making payment on the spot, and if you are making payment in installment, so you have to make a payment of installment along with the interest amount, and that interest amount is 10%, right? So interest I need to calculate. How to calculate? I will showing you that working note, right? So what they're expecting from us? So they are expecting us calculate the amount to be transferred to Mahip's executor's account and prepare the executor's account till its final settlement, right? So one by one will be solving, will be calculating how to pay the amount, right? In each and every installment, how much amount we have to pay to the executor, and then we have to prepare executor's account as well. Any doubt, any question so far? Please tell me. You can ask me any doubt, any question. Sadhana, Dhanushri. Okay. Yes, Shivarish, any doubt, any question so far?
No doubt.
Okay. Sadhana. Now, see, I need to calculate that working note. I need to prepare that working note, how to make the payment to Mahip's executor, right? See, date of death is 30th of June 2020. It means, so death year is what? What is a death year? Death year is 1st April 2020 up to 31st of March 2021, right? And so death is occurred in the middle, that is on 30th of June 2020, right? Okay. Now it is given in the question that we are going to make a payment. So total amount payable is how much? Total amount payable to executor is 1,80,000 rupees. And they are going to make this payment of 1,80,000 in 3 equal annual installments, right? In 3 equal installment, right? So what will be the amount in as per installment? How to calculate amount per installment? So simple. Therefore, installment amount will be installment amount is equal to 1,80,000 rupees divided by 3. It comes to rupees 60,000, right? So each and every year we have to make a payment of 60,000 rupees of installment. First installment, second installment, and then third installment. It's 60,000 rupees. Now, so date from which they are going to make payment. So from which date they are going to make payment? So it is given. They are starting first installment on 30th of June 2021. So I am writing here. Sir, first installment will be on 30th of June 2021. The second installment will be on 30th of June 2022, and third and final installment is on 30th of June 2023, right? So each and every installment, no doubt, I need to make a payment of principal amount of 60,000. Yes, sir. But sir, along with that principal amount, you have to pay interest as well. Interest at the rate 10%, sir. Interest at the rate 10%, sir. Interest at the rate 10%, sir. Yes? Yes or no? Understood so far? Yes, Dhanushri, Sadhana, Shivarish. Understood or not?
Yes, sir.
Okay. If you understood this, so I'm going to calculate that installment and how much amount we have to pay each and every year. Right? See. Sir, amount payable. I'm writing amount payable on 30th of June 2020. That is exactly on death. Right? On a death, we have to supposed to pay entire amount, but we are not making payment entire amount, right? We are unable to make the entire payment. So, but amount payable on 30th of June 2020 is how much? 8 rupees 1,80,000 now. Total amount payable.
Oh, okay.
I am writing total amount payable on 30th of June 2020, right?
Okay.
So total amount payable on 30th of June 2020 is 1,80,000. Sir, on which date I am going to make a first installment payment? My first installment date is 30th of June 2021, sir. Right? But sir, I know that my year ended on 31st of March every year, right? So no doubt I am going to make a payment on 30th of June 2021. That is correct. But sir, I need to close books of accounts on each and every year on 31st of March. So I can say till the date of closing of account, that is on 31st of March 2021. So that is closing date. So up to closing date, how much amount of interest we have to pay? See, 30th from 30th of June up to 31st of March. How many months are there? July, August, September, October, November, December, January, February, and March. 9 months? Yes or no? You can calculate. July, August, September, October, November, December, January, February, March. 9 months. So on 31st of March 2021, up to 31st of March 2021, you haven't paid any single amount, right? So it means on 31st of March 2021, so interest you have to calculate for 9 months, yes or no? Right? You have to calculate interest for 9 months from 30th of June 2020 up to 31st of March 2021. Interest you have to calculate. So how to calculate the interest? So 1,80,000 rupees, right? Multiply by 10%, multiply by 9 divided by 12. Getting why I'm calculating interest? Sir, I'm calculating interest because 31st March is my year end. And by 31st of March 2021, sir, I'm not making any single amount. I'm not making payment of any single money, right? So on that 1,80,000 rupees, there will be a accumulated interest for 9 months, and it comes to how much? Tell me. How much it is? 13,500 rupees, right? So we have to add this interest. So after adding this interest, how much is the total amount payable on 31st of March 2021? So amount payable is 1,93,500, and this is nothing but amount on 31st of March 2021, right? This is payable amount. Sir, I'm not making payment on 31st of March 2021. I'm going to make a payment on 31st of March, 30th June 2021. Every year I'm going to make a payment on 30th of June, right? So date of payment is from 30th of June 21, then 30th of June 22, and then 30th of June 2023. Okay, sir. So now I'm in the year of 21-22, right? So this is the amount payable, balance payable on 31st March 2021 is 1,93,500 rupees. Okay, any doubt so far? Now, but sir, I'm not making payment on 31st of March. I'm going to make a payment on 30th of June 2021. So it means again I need to make a payment of interest for how many months? 3 months. April, May, June, right? So 3 months of interest I need to calculate and add interest for 3 months. So on which amount I need to calculate? So always I need to calculate on the principal amount payable. 1,80,000 rupees multiply by 10 divided by 100 multiply by 3 divided by 12. Right? So what will be the answer? So answer is 4,500. So it means, sir, we have to make a payment of 4,500 rupees of interest as well for 3 months up to 30th of June 2021. Up to 30th of June 2021. So if I after adding these, so amount payable, I will be getting amount payable on 30th of June 2021. How much it is? 1,93,500 plus 4,500. Tell me. 1,98,000 rupees. Sir, I supposed to pay 1,98,000 rupees, right? So now, yes, please.
Little bit confusing.
Which part is confusing? Tell me.
Sir, for 9 months we are calculating, then again we are calculating for 3 months.
See here. Death occurred when? Right?
Yes, sir.
Death is occurred on 30th of June 2020. And you are going to make payment from which date? 30th of June 2021. Then 30th of June 2022. And then 30th of June 2023, yes or no?
Yes.
The problem is, sir, your year ended on 31st of March. And on 31st of March, are you going to prepare financial statements or not? Tell me. Are you going to prepare profit and loss account, trading account, balance sheet or not?
Yes, sir.
Right? See, it's easy for mathematical calculation that I need to calculate interest from June 2020 to 30th June 2021, from this to this and from this to this. This is one year, right? This calculation is easy, but that is not required here. Why? Because you are going to prepare your books of accounts on 31st of March every year. Yes or no? So what I'm writing here, see, once again, see this working notice. On 30th of June 2020, amount payable is how much? 1,80,000, right? Tell me your year end.
31st of March.
31st March.
Yes, sir.
What? 2020 or 21?
21.
21. Are you making payment on 31st of March 2021?
No, sir.
No. So it means you have to pay interest for this much of months or not. Whenever you are preparing balance sheet, whenever you are preparing your profit and loss account, you are going to record 1,80,000 rupees payable, or you are going to record 1,80,000 plus interest of 9 months payable.
Interest also.
Right? You are going to show na in books of accounts, you are going to show in balance sheet, you are going to show in profit and loss account. That's we have to pay 1,80,000 rupees to executor along with interest for 9 months, right? So that's why I need to calculate interest for 9 months from 30th of June up to 31st of March. Yes or no?
31st of March. Yes, sir.
So it comes to 9 months of interest. So if you calculate 1,80,000 rupees multiply by 10%, multiply by 9 divided by 12, you get the answer how much? 13,500, no? 13,500. Now tell me, what is total amount payable on 31st March 2021? How much is amount payable? 1,93,500 is payable. Are you making payment on 31st of March 2021, sir?
No, sir.
No. On which date you are going to make payment then?
30th of June.
June. Yes. You are going to make a payment on 30th of June 2021. Right? So how many number of months gap in between these?
3.
3 months. So are you not going to make a payment of interest for 3 months?
Pay. Interest.
Right now? See, the calculation is simple, Shivarish. Sorry. Hari Prasad.
So, Shivarish, sir.
Shivarish, sorry. I always get confused in Shivarish and Hari Prasad. In TN batch there is a Hari Prasad. Okay. See, if you see from 30th of June to 31st of June 2021, this is 21, this is 20. How many months are there? 12 months, no? Actual 12 months of interest you have to make a payment, yes or no?
Yes, sir.
Right. But here, my accounting year, my year get closed on 31st of March every year. And that's why, just for closing my accounts, just for preparation of the financial statements, I need to break that into 9 and 3 months. Understood now?
Okay.
No doubt I am going to make a payment of interest for 12 months. But sir, my year ended on 31st March 2021 every year. 31st March 2021, then 22, then 23. So for that reason, I need to break that interest into 9 and 3 months. Right? So I have, first of all, I have calculated for 9 months. Then I am calculating for
3 months.
3 months. So how much is 3 months interest? We have already calculated.
4,000.
1,84,500. Yes. So that 4,500 rupees also I am going to add. Yes or no? 4,500. So after adding this 4,500, how much is the amount payable? Tell me now.
1,98,000.
Yes. So on 30th of June 2021, you supposed to pay how much? 1,98,000 rupees. But how much you are going to pay? Tell me. How much you will pay on 30th of June 2021? The first installment. So you have to pay, yes, you have to pay 60,000 rupees plus interest. So how much is the interest amount? So these 13,500 and these 4,500, right? Total interest we have to pay. So 60,000 rupees plus 13,500 plus 4,500. It comes to 78,000. Understood now? So my first installment is 78,000. So I will make payment of 78,000. Understood or not now?
Yes, sir.
So after making payment of 78,000 on 30th of June 2021, how much is the balance? Tell me. So balance on 30th of June 2021. Tell me. 198 minus 78.
120.
120. So still we have to pay 1,20,000 rupees. So when we are going to make that payment, next installment?
2022.
The next installment is on 30th of June 2022. 1 year gap is there, right? So again I need to calculate interest for 9 and 3 months. Understood now? Why sir 9 and 3 months? Because my year end comes in between.
31st.
Yes. Now you're getting. So my year ended on 31st of March 2022. So for again 9 months I need to calculate interest, sir. Yes or no? So how are you going to calculate interest for 9 months now? So on balance amount now. Always on a balance amount, sir, right? So what is balance payable? 120. So you'll be calculating 1,20,000 rupees multiplied by 10% multiplied by 9 divided by 12. Give me the answer.
So 9,000.
9,000? Yeah. So 9,000 rupees we have to pay, right? But we are not going to make payment on 31st of March, no? So I will close this account. So total amount payable on 31st of March, how much?
1,29,000.
So 1,29,000 rupees, right? 1,30,000 rupees is payable on 31st of March 2022. 31st March 2022. Okay. So when you are going to make payment?
30th of June
Absolutely right.
2020.
So I'm writing that second installment date now. So your second installment date is 30th of June 2022. So it comes to 3 months.
3 months.
Yes. So you have to calculate on balance amount. 1,20,000 rupees multiplied by 10% multiplied by 3 divided by 12.
3,000.
How much?
3,000.
Yes, 3,000 rupees is the answer. So 3,000 we have to pay, sir. So after adding this, what is total amount payable?
1,32,000.
1,32,000 rupees. Okay. So but what is the amount for second installment? Tell me. So second
60,000.
installment amount is 60,000 rupees plus interest. So how much is the total amount of interest? 9,000 plus 3,000?
12,000.
12,000. So 60,000 rupees plus 9,000 rupees plus 3,000 rupees. It comes to
72,000.
72,000. So make payment of 72,000 now. So after making payment of 70,000, what is balance on 30th of June 2022? How much it is? 60,000. Okay, sir. 60,000. Now, sir, after 30th of June, which date will come? The 31st of March.
31st.
Because on 31st of March, we have to close books of account.
Year end.
Year end, right? Absolutely right. So on 31st of March 2023, I will be going to close my books of account. So how many months are there? Again 9 months?
Yes.
Right? So again 9 months interest I need to calculate, sir. 60,000 rupees multiplied by 10 divided by 100 multiplied by 9 divided by 12. 4,500.
Yes, sir.
Yes, 4,500. So after adding these on 31st of March, 64,400 is the balance payable on 31st of March 2023.
23.
But sir, I'm not going to make payment on 31st of March. But sir, then so when you are going to make payment? On
30th of
June 2023. So it means so you have to make a payment of interest for
3 months.
3 months. What will be the answer? So your principal is 60,000. Multiply by 10 divided by 100. Multiply by 3 divided by 12. How much? 1,500, sir. Yes or no?
Yes, sir.
So 1,500, sir. After adding this, so what is payable amount?
60,000. 66,000.
66,000 is payable amount. And sir, yes, I'm going to make a payment of whole now. Third and final installment, sir.
Yes, sir.
Third and final 60,000 rupees plus interest. So 60,000 rupees plus 4,500 and 1,500 plus 4,500 plus 1,500. Understood?
Yes,
So it comes to 66,000 and finally we have done with payment. I hope you understood now neatly and nicely. Dhanushri, Sadhana, Shivarish.
yes.
Clear? So this carries marks. So this is the working note that I've shown you. Now this working note I need to show in the ledger account. That's it. Right? Okay. So no doubt it's time consuming. In first, when you are doing first time, it's a time consuming. Otherwise, if you are solving now afterwards, now it's easy, right? You have to just remember 31st March is year end, so you have to calculate for 9 months and then for 3 months, right? That is important. Okay. This answer that I have prepared is nothing. The amount I have done a working note, right? And simply I need to put into the ledger account now. I will show you ledger account. You will get idea. Take this. Okay. So what we have to do first of all, so Mahib's executors account we have prepared here. You know the format: date, particulars, LF amount, date, particulars, LF amount, right? So first of all, amount payable to Mahib's executor, so it is not nothing but my liability, right? So the death of Mahib occurred on 30th of June 2020, right? And on that date 1,80,000 is payable. So I'm writing down here on the credit side 30th of June 2020 by Mahib's capital account 1,80,000 rupees, right? So if I prepare if I show you capital account now, see we have prepared capital account and amount payable to that Mahib I'm transferring to his executor's account. You remember this, right? We are writing at my that executor's account, right? And we shown in the balance sheet liability side. But here we are preparing account. So capital account debit side. So Mahib's executor's account credit side, sir, right? So I have recorded 1,80,000. Then sir, we have calculated 9 months interest. How much it is? So 13,500, right? See here, interest for 9 months on 31st of March 2021. Interest is 13,500. Sir, we are not making payment up to 31st of March 2021. And sir, 31st of March 2021 is my year end. So on year end, I need to close books of accounts, yes or no? So I'm closing books of accounts. So 1,80,000 rupees and 13,500, 1,93,500 rupees are payable, right? And that is my balance carried down. So see here, 31st March 2021, nothing on the debit side. So this is nothing but balance carried down. 1,93,500 is the balance at the end of 2021. Any doubt in this? Yes, any doubt? Any question?
Noted, sir.
Okay. Now this carried down balance becomes a brought down at the beginning of the next year. Yes or no? So see here, on 1st of April 2021, say it is a March 31st 2021, after March next one is in April. So on April 1st 21, by balance brought down is 1,93,500. Now we are in the year of 21-22, right? Right? Okay. So first of all, we have to write down interest up to 30th of June. Yes, sir. 3 months interest we have written 4,500. Then, sir, we have to write down interest up to 31st of March, right? From June to March, 9 months. So we have written by interest 9,000, right? So total amount comes to 2,07,000. So out of 2,07,000, first installment was of 78,000. See here, on 30th of June 2021 to bank, first installment 78,000, right? So from 2,07,000 rupees, we made a payment of 78,000. So what is balance now? The balance comes to 1,29,000. Understood? Right? So this is the balance at the end of the year. So this balance carried down becomes a brought down here, right? Okay. So then we calculated 3 months of interest and 9 months of interest on 30th of June and on 31st of March. So we have recorded 3,000 and 4,500. So after adding these, so it comes to 1,36,500. And so how much we are making payment? So in the second installment on 30th of June 2022, we are making payment of 72,000. So from 1,36,500, we have to subtract 72,000 rupees, right? So how much is the amount payable now? The balance amount payable is 64,500. This is carried down, right? So that carried down becomes a brought down on 1st of April 2023. And so at the end, in the last year, so we have to calculate interest only for April to June, that is for 3 months, right? So 3 months interest, we have calculated 1,500. The total amount comes 66,000, right? And final 66,000 we have paid now on 30th of June 2023. So there is no balance left and my account gets tally on 66,000. Understood this or not? Please tell me. If you have any single question doubt, you can ask me. Sadhana, Dhanushri, Shivarish.
Yes, sir. Clear.
Clear? Okay, good. See, it's 6 mark question, right? Little lengthy, but easy, right? Okay. You can take a 5 minutes of break. We'll continue then. Am I audible you, Sadhana, now? I said take a 5 minutes of break, then we'll continue. Am I audible? Hello?
Sir?
Am I audible?
Yes, sir.
Okay. Sadhana is saying can't hear you. That's why I'm saying asking you. Okay.
Sir, no break only. No.
Yes, it's break only. Take a 5 minutes of break. Yes, Dhanushri, Sadhana, Shivari, are you there? Okay.
Yes, sir.
Okay. See, so far I've covered the concepts and questions which is there in your CBSE syllabus, right? As you know, this chapter, death of a partner chapter, is also there in your CA Foundation, right? So there are few concepts, or you can say adjustments, which is there in CA Foundation, but not in your CBSE, right? So one such adjustment that we did in retirement of a partner chapter as well. In retirement of a partner, we understood, sir, effect of joint life policy. Have you remembered that, Sadhana, Shivari, and Shri? Right? Joint life policy. Same concept is here also in case of death, right? So just see this concept. No doubt you are not going to study this at present because you are focusing on your, I can say, your CBSE board exam. But I am just small concept that I am explaining you, and this will be applicable for your CA Foundation, right? So whenever you are going to start preparing for your CA Foundation, you have to revise this concept at that time, right? Everyone knows now what is joint life policy. So if there are three partners, A, B, and C, right? All the partners are taking life insurance policy jointly. That is known as joint life policy. And what is separate life policy? So separate life policy means having a policy on individual names separately, right? So in case of joint life policy, when there are three partners, A, B, and C, they are taking policy jointly on their names, and premium is paying by firm, right? It's expenses for firm. So that is joint life policy. So there are methods and there are treatments that we have to see regarding joint life policy. See here. In case of a partnership, partners generally get joint life policy in the name of all partners. If partner expires, then partners are entitled for the share in joint life policy, right? So if any partner is expired, for example, partner get expired, then they will get share in joint life policy. Both partner B and C also get a share in joint life policy, and A will also get share in joint life policy. See the method number one. If joint life policy does not appear in the balance sheet, have I taught this to you? I guess I taught this to you in the retirement chapter, right? Same concept is there here in case of death also, right? There is no difference as such. See, if a joint life policy does not appear in a balance sheet, then the firm will gain on the death of a partner. For example, A, B, C are in a partnership sharing the profits and losses in the ratio of 5:3:2. They took a joint life policy of rupees 1 lakh. Now, if A dies, the firm will receive 1 lakh rupees from the insurance company. So what they are saying in method number one, they are saying they have not recorded joint life policy in balance sheet. Means they are not recorded, that they are not shown in the balance sheet that they have taken a joint life policy on the lives of the partners, that they have not shown in the balance sheet. If they are not showing in the balance sheet, so we have to simply pass two journal entries, right? One for receipt of amount and then for distribution of the amount. See, first entry, bank account debit to joint life policy account, right? Bank account debit to joint life policy account. How much? 1 lakh rupees, 1 lakh rupees. Yes, so we have received. So bank account we have debited and joint life policy account we have credited. Now same that joint life policy amount of rupees 1 lakh. So we have to distribute between the parties. Two. So joint life policy account debit to A's capital, B's capital, and C's capital. 50, 30, and 20. Simple. Now see the method number 2. Okay. Tell me any doubt in method number 1. You have taken a policy on the lives of the partner ABC jointly, and that you are not showing in the balance sheet, right? Now suppose partner A is died, and on the occasion of the death of a partner A, you will be receiving amount, right? And what entry you have to pass? So bank account debit to joint life policy account, and then joint life policy account debit to A, B, and C capital. Understood or not, Sadhana? Ralushri, Shivarish, any doubt in method number 1?
Not that, sir.
See the method number 2 now. Okay, Dhanushri. If a joint life policy appears in the balance sheet at a surrender value, then the firm will gain on the death of a partner. See what is meaning of number 2? You are showing in the balance sheet that joint life policy amount, and at surrender value. What is surrender value basically? So whenever you take a policy, you might be aware about this. In your home also, your parents have taken a policy, right? Life insurance policy they have taken, or any policy they have taken. Basically, life insurance policy only. So life insurance policy, if you surrender means so if you are taking life insurance policy, then it will get matured when, sir? On the occasion of death, right? So if you are surrendering that policy after 10-15 years, you are not waited for death, then you will be not getting full amount, right? You will be getting some nominal amount on surrender of that policy, and that is known as surrender value, right? Similarly, that policy will get matured on the death of a partner, and on that you will get the assured amount. So assured amount is nothing but it is written on the policy that this policy of 5 lakh rupees, right? And if death occurred, you will get entire 5 lakh rupees. Understood? So that is a maturity amount. See here now. A, B, C are in a partnership sharing the profits and losses in the ratio of 5:3:2. They took a joint life policy of rupees 1 lakh, which is appearing in the balance sheet at a surrender value of rupees 10,000. So in the balance sheet, it is appearing at surrender value of rupees 10,000. If A dies, the firm will receive 1 lakh rupees from the insurance company. Yes, sir. A died and they received 1 lakh rupees from the insurance company. So what will be the first entry? See, the first entry will remain same. Bank account debit to joint life policy account. 1 lakh rupees, 1 lakh rupees, right? Now, so total you have received 1 lakh rupees. So what is surrender value? So surrender value is 10,000 rupees. So what is balance? So balance is 90,000 rupees. So this 90,000 rupees you have to distribute now. Joint life policy account debit 90,000 rupees to A's capital, B's capital, and C's capital. 90,000 rupees in the ratio of 5:3:2. Understood? So what you have to do whenever it is recorded in the balance sheet at surrender value, and you have received 1 lakh rupees on a death of a partner, you have to subtract 10,000 rupees from surrender value from that policy amount of rupees 1 lakh, amount that you have received from 1 lakh, right? And from that you have to subtract 10,000, that is a surrender value, and balance 90,000 rupees you have to distribute between A, B, and C. Understood or not? See third one. If a joint life policy appears in a balance sheet at surrender value along with joint policy reserve, it means you have prepared a balance sheet. So under balance sheet asset side, joint life policy is at surrender value, and on the balance sheet liability side, joint life policy reserve is there, right? Joint life policy reserve is there. Then the firm will gain on the death of a partner, and reserve will be distributed among the partners. For example, A, B, C are in a partnership sharing the profits and losses in the ratio of 5:3:2. They took a joint life policy of rupees 1 lakh, which is appearing in the balance sheet at the surrender value of rupees 10,000. So here 10,000 rupees they have recorded along with joint life policy reserve. Now if A dies, the firm will receive 1 lakh rupees from the insurance company. So first entry will never change. You received amount of rupees 1 lakh from insurance company. So entry will be bank account debit to joint life policy account 1 lakh rupees, 1 lakh rupees. Then sir, you know total amount is 1 lakh rupees, 10,000 rupees is surrender value. So that 90,000 rupees balance amount you have to distribute between ABC as per their profit sharing ratio. That is second entry. Joint life policy account debit to A's capital, B's capital, and C's capital. Now comes to, so what about this reserve? So reserve is nothing but out of your profit, you have transferred some amount to the joint life policy reserve each and every year. So, and that reserve amount that you have created, sir, on the death of any partner, so that reserve amount also you have to distribute, right? And so that reserve amount is nothing but 10,000 only, right? So the amount that you have recorded at a surrender value as a joint life policy amount, same amount you have recorded as a reserve also, right? Now that reserve amount of rupees 10,000 you have to distribute. So joint life policy reserve account debit to A's capital, B's capital, and C's capital. So see, once again I'm summarizing these three methods. In the first method, joint life policy is not appearing in the balance sheet, right? And suppose a partner dies, then you will be getting 1 lakh rupees of amount of policy. So you have to just write down two journal entries and you have to give effect accordingly. Bank account debit to joint life policy account 1 lakh 1 lakh. Then that 1 lakh rupees you have to distribute among the partners as per their profit sharing ratio. So joint life policy account debit to A's capital, B's capital, and C's capital, right? Then, so after that, see method number 2. So in the method number 2, you have recorded joint life policy at surrender value in the balance sheet asset side, right? And suppose A dies and you are receiving 1 lakh rupee, so first journal entry will not change. So first journal entry will remain same. Bank account debit to joint life policy account. And in the second entry, you have to distribute only 90,000 after subtracting that surrender value of rupees 10,000. Balance 90,000 rupees you have to distribute between A, B, and C. So joint life policy account debit to A's capital, B's capital, C's capital 90,000. Now in the third method, in the balance sheet, joint life policy is appearing at surrender value under balance sheet asset side. And in the balance sheet liability side, joint life policy reserve is appearing at rupees 10,000. Right? Same, sir. So the value at which you have recorded joint life policy in the balance sheet, for that much of amount you have recorded reserve also. Am I audible, Sadhana? Dhanushri, am I audible? Okay. I'm audible to Dhanushri. Yes, Sadhana, please rejoin. So what we have to do here now? So first of all, we have to pass journal entry for receipt of that policy amount. Bank account debit to joint life policy. Then, sir, we have to distribute 90,000 rupees. How I get that? So amount received is 1 lakh minus surrender value 10,000. So balance is 90,000 rupees. And that 90,000 rupees we have to distribute. So joint life policy account debit to A's capital, to B's capital, to C's capital, right? 45, 27, and 18,000 rupees, right? So that we have to distribute it. Then, so last entry is for reserve. So whatever amount is there in the reserve, so that you have to distribute now. So a reserve, there is a 10,000. So joint life policy reserve account debit to A's capital, B's capital, C's capital, 5,000, 3,000, 2,000 is as per their profit sharing ratio, that is 5:3:2. Understood, Dhanushri? Okay. And the last concept is regarding separate life policy. I'm just waiting 2 minutes for Sadhana and Shivarish. If they able to join in 2 minutes, then it's okay. Otherwise, I will continue and end this concept. Is it okay, Dhanushri? Okay. Okay. She is not there. Okay. See, Dhanushri, separate life policy. So what is meaning of separate life policy? It means you have not taken policy jointly, but you have taken a policy on a different partner's name. Instead of taking one joint life policy in the name of all partners may take individual policies on the lives of the respective partners. The premium paid is charged to the profit and loss account on the death of a partner. So whenever you make a payment of a premium, you have to charge it to the profit and loss account because you are treating it as an expenses of the business, right? The premium paid is charged to the profit and loss account. Now, on the death of the partner, then only the amount for which the deceased partner was insured would be recovered from the insurance company. For example, 3 partners are there, A, B, C, and if B is died, then we will get whatever sum assured, right? Whatever sum assured in the policy that on the death you will get this much of amount. The B's executors will get that much of amount. The policies of the surviving partners will continue to survive, but the surrender value of the policies of the surviving partners would also be taken into the account for the purpose of calculating the amount payable to the legal representatives of the deceased partner. In other words, the legal representatives would be entitled to receive share in the surrender value of equivalent to the profit sharing ratio of the deceased. Okay, so what does it mean? So there are 3 partners, A, B, and C, and they are having a policy of rupees, for example, 50,000, 50,000, and 50,000, right? And so surrender value is given. So surrender value is, for example, 5,000 rupees, 5,000 rupees, and 5,000 rupees. So, and policy amount is 50, 50, 50. This is a policy amount, or you can say sum assured. So B died on the death. B died, and he will get how much? He will get 100% 50,000 rupees because 50,000 is the policy amount. But sir, whenever you are giving benefit to the deceased partner's legal representatives, you have to consider surviving partners. So who is surviving partner? A and B, A and C. So you have to consider surviving partner's policy amount at surrender value. So surrender value is 5,000, 5,000. So this also you have to take into the consideration for calculation of share of policy payable to the legal representatives of deceased partner B. So what does it mean? You will get to know this by example. See, Sona, Gabbu, and Amit are in partnership firm. They are sharing the profits and losses in the ratio of 3:1. So policy amount is 1 lakh rupees, 2 lakh rupees, and 3 lakh rupees. Surrender value is 10,000, 20,000, and 30,000. Right? Okay. Now suppose Amit died. So partner Amit died. Then Amit's executors will get how much? So Amit executors will get, but obviously policy amount of rupees 3 lakhs. Right? Multiply by his share. So how much his share is? 3 lakh rupees of policy amount multiplied by Amit share is 1/5 into 1/5. So it comes to 60,000 rupees. Now you might be having a doubt in the mind. So they have taken a policy on individual names, right? So policy belongs to Amit. On Amit's name is 3 lakh rupees. Then why you are calculating 1/5? Sir, even if it is just on the name of Amit, but the right of each and every partner is there for entire amount of policies, right? So that's why 3 lakh rupees of amount of a policy held by Amit, he is not going to get 3 lakh rupees entirely. He is going to get his only share, right? So that's why I'm calculating 3 lakh multiplied by 1/5. So he will be getting 60,000, right? Similarly, he will get how much? Sir, Sona and Gabbu are continuing partners, surviving partners. So he will get share from their surrender value of policy. See, 10,000 is 20,000 is surrender value. So 10,000 rupees plus 20,000 rupees, it comes to 30,000 rupees. And from this 30,000, he will get 1/5 share as well. So that comes to 6,000 rupees, right? So total 66,000 and 6,000, 66,000 rupees he will get. Understood? So what I'm saying, even if they have taken a policy on individual name, It's just for a namesake. They have taken a policy on individual name, but they are having a right. They are having a right. All these three partners are having a right on everyone's policy. They will get share from everyone's policy. So if Amit is getting Amit is died on some date, and his policy will get matured, he will not get total 3 lakh rupees on his name. He will get his only share, that is 1/5, as well as he will be getting share of Sona and Gabbu surrender value, and surrender value is 30,000. Now, which policy, which amount, which entry we have to pass? So you are getting 3 lakh rupees of sum assured, right? Firm will get how much? So firm will get 3 lakh rupees total on the death of Amit. So first entry is for that only. Bank account debit to separate life policy of a deceased partner, and that is nothing but 3 lakh rupees, 3 lakh rupees, right? Policy value received on the death of the partner. Now second entry is important, sir. So separate life policy of deceased partner account debit at assured value. So assured value is how much? 3 lakh rupees. But he is not receiving entire 3 lakh rupees. He is going to receive only 60,000 rupees, his share. So I will be debiting 60,000 rupees here, right? Then we have to debit separate life policy of remaining partners at surrender value. So what is separate life policy? Tell me in this. Separate life policy account, we have to debit for remaining partner as well for a surrender value. So what is surrender value here? 10,000 plus 30,000, 10,000 plus 20,000, 30,000, yes or no? Yes. See, I'm just solving this here. First of all, I need to pass journal entry for receipt of amount. Bank account debit to policy. Sir, I have received 3 lakh rupees. Sir, I need to distribute this amount between partners now. And for that, second entry is, so policy account debit 3 lakh rupees, right? Then, so we have to debit remaining partners policy at surrender value, 10 plus 20, 30,000. So remaining partner policy account debit at surrender value 30,000 rupees, sir. I'm writing once again here. Sir, I have debited policy account at, you can say, sum assured. That is, but obviously 3 lakh rupees. You have received 3 lakh rupees. Then you have to debit remaining partner policy amount. Remaining partner policy account you have to debit at surrender value, and it comes to 30,000 rupees. Okay. Then you have to credit. Executor account. This is partner executor account, right? For how much amount, sir? So 3 lakh 1/5 share plus 30,000 rupees multiply by 1/5. So it comes to 66,000 rupees, right? And so remaining amount we have to distribute among continuing partners capital account. So here death is Amit, death is occurred now. So Amit executor account we have to credit, and we have to credit Sona and Gabbu remaining amount as per their profit sharing ratio. Understood? And then profit sharing ratio is 3/5 and 1/5, right? So how much is the balance? Tell me. 3,30,000 minus 66,000. You can use calculator. In CA Foundation, calculator is allowed. 330 minus 66. So balance is 2,64,000, right? Yes, and that 2,64,000 rupees you have to distribute between Sona and Gabbu as per the profit sharing ratio, and that profit sharing ratio is 3/5 and 1/5, right? 3/5 and 1/5. 2,64,000. Yes. Multiply by 52,800 for Gabbu and 1,58,400 for Sona, right? Understood? Yes. Okay. So that's it for this chapter.